What is one risk or concern that is currently keeping you up at night?
Oh boy, one risk or concern. uh, I don't think I can have one only. I think this is one of the periods where I'm certainly very concerned about a lot of things. Some that I think are immediately important, others that I think are going to matter over the long term. Some do have immediate ramifications on our portfolio, and many don't. And kind of the way I think about it is if I wanted to split it into different categories, I think the thing that actually worries me the most individually kind of has nothing to do with the economy. It has to do kind of more of the geopolitical environment that we live in today. I think we live in a very precarious time. I think the world is on the edge of potentially really bad outcomes happening, and that worries me the most. Uh, there's nothing I could do about it. There's nothing that an investor can do about it, I'm afraid. But that's definitely the thing that worries me the most about the world today. I think economically, I'm worried about two big things. The first thing that I worry about is what's happening in kind of the debt market in general. And if I wanted to split it into two, I would say on the private debt market, I would be worried about what's happening. We've seen some defaults recently. I think on the one hand, it has the benefit, kind of on the pro side of things, that it's not in the banks, and so odds are, compared to kind of what happened pre-GFC, it's going to have less of a systemic effect. But on the other hand, it does also mean that because it's in the shadow banking, we really don't know the extent of it. We don't know what's lurking in the shadows by definition. So that worries me, because we don't know what we don't know, I guess is the big thing here. More long term, I would say, is what's happening to the balance sheets of most of the world. I think sovereign debt is at unsustainable levels. We're looking at a demographic future where it's probably going to continue to go up. We're looking at a situation certainly in Western democracy where I struggle to see how politicians are going to do the right thing for future generations. And I think the path of least resistance is to try to inflate away the debt. Uh, I think in an environment where central banks could become less independent, that would open the door for that, which basically means we deal with high inflation over many, many years. Uh, I Potentially that's why gold is reacting the way it is, though I think we'd be reading too much into the actions of central banks that are kind of been the main buyers of gold this year. But that would be my worry, that you're going to have very high inflation, uh, political instability in the West, and lack of leadership in the world. And it does have obviously economic ramifications, and it does keep me up at night. Aubrey?
Well, I think you've covered a lot of risks there. So the sort of non-economic risk for me, I think, is climate change, and I think that the world is treating it as the world's risk-reward stance here is bizarre.
Mm-hmm.
That you don't have to believe that climate change is happening, that man is doing it to say we actually still need to do something about it. Look at the trillions of dollars that America spent on preparing for war with Russia up to the Cold War. They spent trillions on an event that never happened. Russia never invaded.
Yeah.
But no one says, well, that wasn't money well spent.
Yeah.
And I think the same is true with climate change. It doesn't matter whether you believe it or not. There is a risk of a really bad outcome. Why don't you spend money? And anyway, that is my non-economic risk. My economic risk, I think, is it's two parts. What if the bubble we're in does not pop? And part two, what if it does pop? So what if it doesn't pop? Well, we will probably underperform for that period of time. What if it does pop? Well, I think a lot of, certainly what we've said up to now is it's not systemic, so it shouldn't affect the broader economy, but the thing that keeps me awake is what if it does? What if the wealth effect destruction is such that people spend a lot less, and then that does have an impact on the real world? Now, I think so long as the banks are fine, we should be fine. But I think we do need to be cognizant that there are risks that are slightly broader.
I think that's a very good point. And I think one big difference this time around compared to kind of 99, 2000 is consumer spending now is much more concentrated in the top, especially in the US, in the top 10% of the population. I think it's 50% of consumer spending now happens by the top 10% wealthiest Americans. And it's similar elsewhere in the world. But then the other thing is the size of the US market in dollar terms as a percentage of US GDP and global GDP is much, much bigger than in 99, 2000. And so the wealth effect could be material to GDP, could knock off a few percentage points out of GDP over a couple of years. So I think you're right there that it could have a much bigger impact.
And especially with the advent of apps like Robinhood, it is easier to trade now than it ever has been. And we're seeing the retail participation in markets is at an all-time high. And I'm sure that is because it is easier to do so. But that just means that there is a bigger effect on consumer spending.